Now let's be honest, many of us are still waiting for a Fed pivot. We believe that Jerome Powell will chicken out and lower rates when the markets start collapsing. He will start printing money to save the economy, especially if unemployment starts to shoot up, right? Now here's the thing that we must understand, and it all goes back to the Federal Reserve's dual mandate. Now, the Fed is mandated by law to accomplish two goals: maximum employment and stable prices. There's no mention of keeping the stock market high or ensuring that asset prices don't crash. Now, the entire squad of the Federal Reserve, we are talking about Powell, Kashkari, Brainard, they are all chanting the same thing in unison. Inflation is too high and they need to crush it no matter the cost. They have one singular battle cry, which is rate hikes are coming. Interest rates are going to keep climbing, but no one is listening. In Powell's interview with the Cato Institute, he remains committed to battling inflation, and he has made a few statements that reveal his intentions. He said, "We need to act now, forthrightly, strongly, as we have been doing." He also mentions the Fed has and accepts responsibility for price stability. Powell's now staking the entire reputation of the central bank and his legacy on fighting inflation, and he's gonna get the job done. So it doesn't matter how high or low inflation prints out over the next 3 to 6 months, Powell is still going to hike. It's still going to be another 50 to 75 basis points to bring the Fed funds rate well above 3%. And the crazy thing is, the market is still trying to hang on to all those bear market rally gains. There's still a big disconnect between the stock market and the reality of the economy. You can only fight inflation with deflation, and the only way to cause deflation is by crushing demand through higher rates. There's no way to solve the supply side issue when the infrastructure can't even handle it. Plus, there's also an energy crisis about to go wild in Europe. What concerns the Fed the most is inflation expectations, not really inflation per se, but what people perceive inflation to be. Remember, the Fed's target is 2% inflation, and they don't want it too high or too low. Today, it is over 8%, and that is warping the minds of consumers. You and I, we're already feeling the pinch. We are spending more money for the same amount of stuff. And because of this, we know we need more money to survive. And where is this money going to come from? Our job wages. People are going to demand more money, and this is what Powell is truly afraid of. And the thing about wages is that they are very sticky. It is easy to raise wages for workers, but near impossible to lower them and have people accept it, especially in this inflation hell today. And if inflation continues to stay persistently high, especially in this labor market with record low unemployment, people are going to demand higher wages. They want to be paid more as their cost of living increases, and we can see that wage growth has skyrocketed up and is staying persistently above 10% for over a year. Now, I know wages are not keeping pace with the cost of living, but it can trigger what is known as a wage price spiral, and this is when workers demand a higher wage because of inflation, and this causes the cost of production to go up, and because the cost of production soars, prices across the board also flies up, resulting in even higher inflation, and the cycle keeps getting worse and worse and worse until we have runaway inflation. And whether you believe in the wage price spiral is kind of irrelevant, because all that matters is that the Federal Reserve believes it. The Atlanta Fed has been tracking wage growth for a long time, and we can see that wage growth has more than doubled over the last year alone. So now we have a strong labor market, right? Strong labor market, coupled with wages going up and a supply side problem that's only going to get worse. And that equals an inflation crisis that could spiral out of control. And this is why the Fed is trying to reset inflation expectations. They are terrified of repeating the 1970s when inflation was well over 8% for nearly a decade. And I want us to pay attention to this part. Powell stated the public had really come to think of high inflation as the norm following what he called failed attempts to rein in soaring prices, a failure he attributed to the Fed's unwillingness to keep monetary policy tight enough for long enough. Let me translate that. We need to hike rates much higher and keep it there for much longer, or we will face a decade of high inflation and high unemployment. And if we look back in the early 80s, we can see they initially hiked rates to 17.5% and quickly slammed it down within a few months. But inflation continued to stay high. inflation was much stickier. So Powell Volcker finally hiked to 20% and it stayed crazy high for the next 18 months. Inflation was finally crushed, but it resulted in nearly 10% unemployment for 4 long years. This is Jerome Powell's greatest fear. That is his nemesis. He wants to avoid the Volcker era inflation crisis. And there's no room for error, and I believe the Fed is going to continue to send rates soaring. We are going to have 50 basis points, 75 basis points hikes in succession, boom, boom, boom. And it doesn't matter how low asset prices crash, because the Fed, once again, is mandated by law to care about stable prices and employment. They don't care about your home value, the S&P 500 or the price of gold. The Fed has the perfect setup of the perfect excuse to destroy demand and bring inflation down. And we need to understand that all this is intentional. The money printing back in 2020 was intentional. 12 years of low interest rates were intentional. And it's all about getting inflation above 2%, slightly above there, to stimulate economic growth. And we can see since 2010, inflation was actually below 2% for many years. And at least to the Fed, that was bad news, because they fear it could lead to deflation. So what did they do? They kept rates low. When the lockdowns began, they printed up trillions of dollars, giving companies tons of money to hire people. And this meant people had more money to spend and speculate, and inflation broke well past 2% and is headed to the moon. And now the reverse is happening. We have the American government denying that we are in a recession, right? Even though we have met the criteria for one. The textbook definition of a recession is 2 quarters of negative GDP growth. Plus now, we have a near record low unemployment of 3.7%. And on the surface, this signals a booming economy. It looks like the economy is still very strong. This is the perfect setup for Powell to continue hiking rates and kick quantitative tightening into high gear. Because at least to Powell, if inflation is kept high thanks to the supply side issues and we have near maximum employment with wages increasing, what does this mean? It means people now have more spending power and inflation will continue to soar. Now, we need to understand the strategy that the Federal Reserve has adopted. There's a big misconception that all Powell has to do is to tighten until inflation hits 2%, declare victory, and then start the pivot. Now, that's not going to happen, at least for quite a while. We are nowhere close to pivoting just yet. The Fed has been using a strategy called average inflation targeting since 2020. That means Powell is going to take into account the past as well as the present. Bygones will no longer be bygones, and that means if inflation stays persistently over 2%, especially at today's crazy rate, he will have to wrestle inflation down to below 2% and keep it there. And this is one reason why the Fed printed so much money in 2020. They were afraid of the economy going to a deflationary spiral. Average inflation was below 2% for years, so they overcompensated. They flooded the economy with liquidity, and now inflation is leaps and bounds ahead of 2%. And this is why everyone says the Fed has lost control. And now we have had inflation sky high for over a year. So Powell is going to tighten harder and for longer. Price stability has been out of whack for far too long. He's going to hike rates until inflation is crushed down to 2% or even lower. And he's going to keep it there. Interest rates are going to stay high to destroy demand. Because remember, the sticky parts of inflation such as wages need to catch up. Food and fuel prices will be the first to collapse, but the other parts of inflation will take some time to drop. And we can see that the Atlanta Fed sticky price CPI is still very high at 5.8%. Once we see it crash down to 2% and stay there for some time, then we can say that victory is near the corner and the Fed could start to pivot again. Now, how long this will take, no one knows for sure. It might take the Fed the next 12 to 18 months to get inflation back down to 2%. But they'll probably keep it there for another 12 to 18 months to compensate for the crazy numbers we are seeing right now. They want the sticky price CPI to catch up and fall down back to 2% as well. So it doesn't matter what the August inflation numbers are when they come out. It might print a little higher or a little lower. The Fed is still going to have to hike rates higher and keep them there until they are convinced that inflation is crushed for a long enough period of time. Remember, the Fed funds rate is around 2.5 to 3%, while the sticky CPI inflation is near 6%. There's still a very big gap between those two numbers. Interest rates will need to go above the inflation rate to drive it down. The Fed is hoping to tiptoe around the hikes and do it gradually so they don't need to suddenly hike by, say, 500 basis points and crash the economy into a depression. So we need to get this right. There will be two phases. Phase 1, tightening of monetary policy, which is taking money out of the system and rates going higher. And I believe this is the denial phase where everyone still believes a pivot is coming. But the next phase, which is keeping rates high to crush inflation, will be the game changer. This will be the point where everyone wakes up and realizes, hey, the pain is going to continue, money is still hard to borrow, I can get a better return in bonds or savings deposit account. That could be the trigger for markets to collapse even lower. Right now, there are a lot of investors split between two camps. One side believes a pivot is coming very soon and the markets are gonna rally, and the other believes that Powell is dead serious about hiking and a further crash is coming. And this tells me the end of the world scenario is not here yet. The sky has not fallen and we have not seen the bottom just yet. And this means we have to prepare for more downside to come in asset prices. This inflation fight is about making the masses happy and keeping the peace, because right now, inflation is decimating the middle class and the poor more, and if asset prices collapses, the real damage done to the rich won't really be that significant compared to the poor. And which group do you think has a bigger voter base? And this is why I believe a tsunami of rate hikes is still coming and the high waters aren't going to recede for quite a while. This asset price collapse is just a byproduct of the inflation fight. So let me know what you think in the comments below. Do you believe the Fed will go all the way and crush inflation, or are they misleading us and a hidden pivot is coming down the road? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these insane times.